Good morning. Need some help finding this market tough? Well, we're going to talk about that today as we go through. It's not an easy market, I know. Stockradar basic membership is effectively protected. We'll talk about our cash equity ratio, which I talk about every week, and it's very small on the equity side at the moment. The Energizer portfolios are always leveraged to the upside because that's what the market spends most of its time doing. Corrective markets are the worst time, no doubt, but history shows it will recover. As I said, the market spends most of its time going up. So this is where you need to be really strong and hard in these types of markets because it is difficult, no doubt. We need to prepare properly. Okay, so well, you're right. It is tough, but these markets exist. Here are some simple common sense ideas for traversing this rough terrain. They're all still decisions you must make. Okay, we can't just sit in the ISO. Don't freeze up, don't walk away, don't bottom draw stuff, okay? Okay, the decisions I would make in this sort of market, my first decision is keep plenty of cash. Okay, so when you're taking out, keep your cash. Focus on companies paying dividends, have a proper focus and have an uptrend in their share prices. It helps downside risk, which we're always got to prepare for, especially at the moment. Capital preservation mode is what we're in. We don't have all the answers, we just play the smart game, and the odds and lowering risk is the smart move to do at the moment. Don't make risky decisions when you don't know where the risk is. Most stocks, especially the smaller stocks not generating profits, are going down. The message is don't take a punt yet, keep your cash. No hurry to reduce cash. The lower stocks go, the more effective your cash deployment will be. I will always be there and guide you no matter what the market is doing. That's why I'm here today, to talk to you about it all. But always know if you're going to play the stock market game, you must be prepared properly. Okay, my little sermon for the morning as we get into this tough market phase. Let's look at some markets and see how they're doing. Okay, firstly, the stock market game. I'm going to talk about 4 simple tips as we go through in trading tactics. A normal overview there, 4 simple tips. The stock market game, the stock market is the greatest teacher of all. We must learn from it. So I'm going to go through all those processes today to try and help you get through these sort of difficult times, okay? So firstly to the markets, let's have a look at the Dow Jones. Trending down, no question there. It hasn't been as bad as the Nasdaq. It's more of an industrial bias, but we have the lower lows and lower highs there, which defines a trend. I've just isolated this area down here as a possible area to look for some support. We can see here that the sellers are dominating the market. There's no upside momentum, so we just continue to look for the downside for the moment. The Nasdaq is similar, although it has reached its 50% level. Whether we get a correction from here, I don't know, but this was pretty heavy selling coming down here, and this is very, very weak. So you've got to be very careful about catching these falling stocks at the moment. Well, this is the Nasdaq, of course, but you've got lots of tech stocks which are coming up. They've come off so far. You know, the Amazons, the Googles, all these stocks have come off a long way, which is quite surprising. Well, not really surprising considering the amount they went up, but they have come down a long way very quickly. Okay, so that's that side of the market. We go to the commodities. Gold and copper are still range trading and really not telling us anything at the moment. That's why the stocks are up one day, down the next. We really can't tell. Copper is the same situation. We go to Brent. It's levitating better. It's up into the high of its range. It hit it today. If we do go back and just have a look at the long-term view of this commodity, we can see really this is been the trading range has been since about 2008, 2009 when we saw that big peak. It came down, it rallied again, came down. It's been in this range for quite some time, and we're certainly up there at the moment, okay? So we've got to be a little bit careful, but who knows what sort of world we're living in now, and it may go through R2, it may continue on, but for the moment, the Brent crude is the best supported commodity that we can see at the moment. Not a lot of volume down here. Momentum is still okay, so it looks fine. It's just rotating, and hopefully we'll continue to see some higher prices there. Okay, the ordinaries, or the ASX Next 200, I should call it. It's just rotating between 7,000, 7,630. It's in this range. There's no trend at the moment, so we really just have to be very careful, which is what the market's telling us, and we can see what the momentum index is telling us down. It is flat as it goes sideways, so no directional move here on the ASX 200 at the moment. Okay, now if I just go through a few things there on the ASX 200, our Stockradar portfolio is up 2 to 34 stock picks of 165 stocks. There are 3 ETFs, I have added 21 ETFs, okay? So the conservative portfolio is currently at 3 stocks out of 20, which is roughly equating to a 15% equity 85% cash. Now, if I look at the Stockradar, we've got 34 out of 167, equates to about 20%. So that's really what those basic memberships is saying. The conservative portfolios are saying that's where your cash and your equity balance should lie at the moment, about 20-80. And that really just allows us to watch this market fall down, and we can catch some great stocks on the way down. The Energizer is a completely different kettle of fish because it's always being weighted towards the upside, and that's what we're always ready for the upside, and that's when it will capitalise on. These markets it finds tough. So the Energizer portfolio, the 5 stock, currently has 4 out of 5, which is okay. So we've got 20% cash there, and the other one is the 10 stock, which has 7 out of 10, which also has a sort of a slightly higher level of cash than it normally has. So a little bit wary. The whole situation here is a sideways trading range. The conservative, the Stockradar portfolio being down to around about 20%. The conservative portfolio being 3 out of 20. So it's all a very, very careful sort of view that we've got of the market at the moment. Okay, so let's have a look at a few stocks and see if we can find some hope amongst all the rubble at the moment. Okay, so firstly I'll go to Atlas Arterial, which I've actually been in for a while since it broke up here. Now, it broke up here. This is going back to March, so it's quite a while. It's come down and it's slowly been climbing, getting through this level again. The interesting thing is I looked at Santos last week, which is a really slow climb, but all the signals are still green, you know, and this is a similar situation with Atlas Arterial, that everything here, it's above the average, volume is quite good, momentum is turning up above zero, so all the signals are flashing green. It's just been a very, very slow rise. Although having said that, the market is a tough market, so anything that's rising in this market is probably going to be a good thing. So Atlas Arterial is an interesting one. I'm going to look at a couple more transport stocks for you today because there's something occurring there. I know Qantas probably down a little bit today, the whole market's down a little bit today, but when I look at Qantas here, it's trading in this range between just below 450 and up to around 560, 570, and this has been the range for over a year now. So we're sitting in this range here, we're holding off the lows, which is good, and we're sort of getting this sort of upward slant here. Nothing really on the volume, slightly positive momentum. It's just sort of above the average, although it is swinging around. There is maybe a slight upward bias. However, we have the beauty of sitting here and waiting and watching and seeing if 560, 570 will break. That should be, say, 560, not 460. There is a big wall of resistance at 560, a steady build-up of buying pressure challenging it. So if it does fall, we could see R2. You know, I know they've been a little bit, you know, like the tourism stocks, a little bit flighty, but that's quite a good range there. And if it does break out of that, that's probably quite a good sign. And I think these sellers up here will start reversing their situation to becoming buyers. Trend intensity rating is 0, as you would expect at the moment. Okay, Horizon, which is the little one that I've been talking about recently that I think may be ready to be a bit of a jumper. It's had the downtrend, it's had the sideways move. It is just flirting with this resistance around 405 at the moment. We haven't got a decisive break. We've got some reasonably good volume down here. Momentum's good. Everything looks okay here. The trend intensity rating is still +1, but if it does break above here, we will start getting a very positive trend intensity rating for Horizon. So wait, watch, just be careful, because it may not go now, it may be a little bit longer, who knows. But it's certainly worth watching. And then we go to TRANSurban ones, which I haven't touched for a long time because they've just been going sideways. It again is starting to show signs of life, okay? Because it is a good stock, we know. It's had a very good life, but the last few years it's really just gone sideways between about 16 and down around 10. But we can just see here recently, we see a bit of volume come here, the green bars here. Momentum's a bit better, it's above the average. I've noted some red bars here for you, in that they didn't really make much of a dent on the trading range, on the price. So that sort of, to me, is a good sign of strength, as you know. So this is looking interesting. Again, we're not there yet. We're at trend intensity rating of 0, but these transport stocks may be ready to have a little bit of a run for whatever reason. We can never really know these things, but they look interesting and certainly worth watching at the moment. Now, I'm going to the other side of the coin, the consumer staples, which I was getting quite hopeful there for a while. And if we look at the Coles one, which we looked at recently, it's just failed here. And if I just wick up this volume here, get rid of those big spikes back there, you can actually see what's happened here of late. We've got some pretty heavy volume here. So this is a failure here. We've come back down, we've broken below this little bit of support area down here. In fact, I can just get rid of that now, it doesn't really matter. And we may well see come back to S1 again now. We've got some volume here. This has slowed right down. We're now clicking below the average. So this is a failure. So people are a little disappointed about this. So coals, although it's still +1 from last week, will probably be looking a little bit weaker, but it seems like a bit of a failure for the moment and maybe back towards the bottom of its trading range. Now, we go to Woolworths, which is another stock which I haven't looked at for a long time, mainly because it's been going sideways to down, but let's just have a look at it today and see what we can see. So for a start, what we've got here, let me just tighten it up a bit, is we have Woolworths. So this is going back to 2019 to this. So we've gone sideways for a couple of years now, but, sorry about that, but more recently, we can just see, so this pattern here, we've now got these lower low, lower high, lower high, lower high, lower high. Each rally is failing, and this last rally here wasn't on too bad a volume here. There's quite a few good green bars here, but then it certainly got slammed by the sellers very quickly. Now this area down here, this low point around 34.38, 34.30 is a fairly key area, because if I go back and have a little bit more of a look at this chart, go back a bit longer, we can really see what we've got here. We can see a nice big uptrend here, and we've really gone sideways, and this really is quite what I would call a big distribution pattern, that the smart money is selling into these rallies, and we're seeing these people are starting to sell earlier and earlier, which is giving a little bit of a negative taint here. So Woolworths to me is certainly a bit of a worry. It's certainly a risky play at the moment. It's not really doing a lot, but I would certainly be watching this area here. I don't know what's going on today, but the pressure is on Woolworths is down. And if I also look at Metcash, which was looking good for a while, also took a tumble. I've also seen Endeavour come back and Elders Resources come back. So that consumer staple sentiment is starting to crack a little bit, and we can see here the big worry here is Woolworths. So I'm not ready to buy this at support yet. I'm ready to watch this and just let it happen. If it falls, great. We get better return on our cash if we can buy it cheaper. So that's Woolworths and the consumer staples sector and the transport sector, which looks more interesting. Okay, now just a couple of little stocks I want to have a look at. Might be of interest to you, I don't know. The banking sector's been a funny sector of late. CBA just doesn't seem to want to go down, but it doesn't seem to want to go up either. And so it's been a bit of a weird one there, and NAB's still holding up. But I just looked at Bendigo Bank here. This has had a bit of quite a good climb up here during 2021. It's come back and it's been correcting for a while, but it's slowly but surely just sort of edging up towards this area here, which is up around $11, just over $11. Now, there's not a lot of volume here, but the price momentum and above the average is actually looking quite good. So it had a trend intensity rating of +1. It may or may not, but if it does go through here, you may have a bit of a run on this bank here. The banks have all been a little bit different, which is strange of late, so we have to play the game as we see them. And if I look at this stock here, if it breaks above here, that's a new high, and that's a good trade for me. Okay? Especially if I get a confirming trend intensity rating. Okay, the other one I want to have a look at is, I talked about risk before. Now we're talking about risk in our market. There's a lot of stocks that are very risky because they're going down. The two sectors that aren't, which are utilities and energy, I'd like to call energy a safe sector at the moment because it's trending up. It is safe on that basis, but as a commodity it can be very dangerous. So that's why I'm keeping a close eye on crude at the moment, because it can be a tricky one to watch, or tricky one to play. So, Beach Petroleum. What I do know is that Stokes is on here, and that interests me quite a lot, because we know what he can do. He's a smart player. He edges in. He keeps taking stock, building up his weighting until he can make a play that he wants to play, as he did with Boral. Anyway, Beach Petroleum has had a good bounce up here. It had a good rally yesterday, cut up to about 174. It's probably a bit flattened off today, but it's looking pretty good again. We're getting some volume here. Momentum is steady. It's above the average. It's creating a little trend reversal and now creating a small uptrend here. So it looks quite good, Beach Petroleum, for the moment. Trend intensity rating is of 7 as of last week. It'll probably be a bit better this week. But it's still playing out the way we'd expect for what is working on an underlying commodity that is notoriously volatile. But Beach Petroleum is one that I would quite like at the moment, and is still trending higher. Of course, prepare with these stocks. Okay, so that's all the stocks I want to go through today. Just be very careful out there. There's lots of tough stocks out there. A lot of stock rallies are getting bunged on the head, which means the market sentiment is not that confident at the moment. So we're not in an uptrend wave, if you like. We're in a very cautious wave, and that's how the market's behaving and how stocks are behaving. So we're getting knocked out quite a lot, and that's the way we do. But we still make sure we don't hang in there. We preserve our capital as best we can. Okay, now what I'm going to go to is trading tactics. Now I talked about 4 simple tips for you, and talking about the stock market. So for 4 simple tips, the stock market, are you up for it? If you play the game, you've got to be up for it, because there are all sorts of markets you've got to deal with, all sorts of money things you've got to deal with, all sorts of different psychological things, trading systems, all sorts of stuff. But we always try to bring it back to simplicity and make it fairly simple for you. But the stock market, what does it do? It tests us. It teaches us, it teases us, it frustrates us, and it challenges us. And sometimes it's nice to us. But anyway, that's the way it goes. Okay, so what do we learn? Or the real question is, what do we need to learn? The stock market is a teacher. We must learn from what the stock market's telling us, okay? So there are 4 things here that I've isolated that I think are very, very important when you're trading. Firstly is know your biases. Now, I've got a big list of biases here, which you can all find on my blog. If you type in biases into my blog and go to the second article, you will see all these different biases here. And I'm just going to give you an example. Confirmation bias. We tend to listen only to information that confirms our preconceptions. One of the many reasons it's hard to have an intelligent conversation about climate change. Well, that's a different thing, but confirmation bias is saying taking that information you like and reading it, or not reading an article you don't want to hear because it's a negative thing. So confirmation bias is only taking on the stuff that you want to hear, and that's not a good thing to do. And they're all, as I said, here's a list of 20 different biases that we've all got, and you're going to relate to a lot of them, and they affect our trading. Secondly, can you see clearly? Can you see clearly without, filling indicators to fit what you want to do, this sort of thing? Can you follow processes? Once you've set a nice big plan or a nice good trade plan, can you follow it? And the 4th one is, are you disciplined? So those 4 things about know your biases, can you see clearly the market, what's happening, can you follow processes, and can you be disciplined, are 4 things that will underpin any good trading strategy. It's vital. Okay, so why do we need to understand and learn these practices? Okay, firstly, biases destroy good trading unless you understand yours. So you must understand what your biases are before you're going to be able to make good trading decisions. Okay, and there are lots of them there. Secondly, seeing clearly means you are objective. Okay, not taking little bits and pieces to what you want. Look at the market as it's telling you. Like I look at the charts, I always look at the same indicators, and I always look at the same patterns, all this sort of stuff, so I can know exactly what the chart's doing, and I try and be as objective as I can. No processes involved, you will not be consistent. If you have a process, it will keep you consistent. Again, you're building that process as you learn and understand it will get better and better and better, and keep your consistency better and better, and also your profitability. If you don't have any discipline, you will find it hard to execute any trade plan. The stop goes off, will I or won't I, all these sorts of things. Do I enter the stock today or not? Am I going to take on some sort of bank stock, or am I going to take on a tech stock? I don't know. You need to follow your rules and have the discipline to do that. Okay, so those 4 things are very important. We all need mind power to achieve this success. So a lot of the stock market is about the mind and how the mind works, how psychology works, behavioural analysis, that's what it's all about. And the price never lies, and that's what I always listen to, the price. Okay? So these things I'm talking about here aren't optional. It's sort of not, I can sort of talk about these and you say, well, that's sort of nice, having a bias, stuff like that. But you need to know these things. If you really want to be successful, you've got to work at this stuff. So they're not optional, they are necessities. And my little old Nike motto tells me all the time, just do it, just do it. It always reminds me what I am supposed to do. So don't be a wilting flower. Believe, have faith, be strong, and be confident. And now, at the moment, is a very good time to review all these qualities and practices. Okay? They're very important to your trading. All right, now, so that's trading tactics. What's happening at Stockradar? The newsletter was out last week, the macro view. We cover the indices and commodities, an Aussie stock review, an article on getting the psycho advantage, How can we use psychology to our advantage? So that's quite an interesting article for you. My stock on alert this week is Propel Funerals, which is a little stock that's got a nice little uptrend and pays a little bit of yield, I think, as well. So that's quite a nice little stock there. So that's all in the newsletter. If you want to look at that, you can go sign up and have a look at that newsletter. So that's really all I've got for you today. Just be careful out there, it's tough. The stock market is a very simple place if we let it be. I keep reminding you of this. Yes, it challenges us, but through education and persistence, we will prevail. Okay, don't give up. Don't overanalyze, don't data mine, Don't overcomplicate, accept and be clear about what you see, free of any biases you may have. When your signals are triggered, be clear, be decisive, be confident in yourself and your trade plan. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks.